What is a fiscal quarter? Q1, Q2, Q3, Q4. What does it mean and how does it work? Listen up. A fiscal quarter is a 3-month period within a fiscal year that companies, governments, and organizations use for financial reporting, budgeting, and performance tracking. Each fiscal year typically consists of 4 quarters labeled Q1, Q2, Q3, and Q4. And the exact timing of these quarters may vary depending on the organization's fiscal calendar. Fiscal quarters are critical for understanding financial health, comparing performance over time, and meeting regulatory reporting requirements. They align financial activities with specific time periods, facilitating consistent analysis and transparency for stakeholders. Let me break down the fiscal quarters. Now, in most cases, fiscal quarters align with the calendar year, but organizations can define their fiscal year differently. Q1 is first quarter, January 1st to March 31st, Q2 is second quarter, April 1st to June 30th, Q3 is the third quarter, July 1st to September 30th, Q4 fourth quarter, October 1st to December 31st. Mind you, organizations can define their fiscal year differently. Very easy to cap. Fiscal quarters serve several key purposes. We have the financial reporting. Public companies are required to report earnings, revenue, and other financial metrics quarterly. Even investors use quarterly reports to assess the company's financial health and compare performance with peers. Budgeting and planning. Businesses use quarterly periods to allocate resources, track progress, and adjust strategies. Government agencies monitor spending and ensure compliance with budgetary limits. Performance tracking. Dividing a fiscal year into quarters allows businesses to identify trends and address issues promptly. Regulatory compliance. Quarters provide a standard framework for meeting reporting obligations with entities like the Securities and Exchange Commission, SEC. Let me share 2 examples of companies and their fiscal quarters for better understanding. Apple Inc., for instance. Their fiscal year starts October 1st and ends September 30th. Their Q1 is October to December, Q2 is January to March, Q3 is April to June, Q4, July to September. Another example, Walmart. Their own fiscal year starts February 1st and ends January 31st. Their Q1 is February to April, Q2 is May to July, Q3 is August to October, Q4 is November to January. Not gonna lie, fiscal quarters has a few challenges. Short-term focus. Companies may prioritize meeting quarterly earnings expectations over long-term goals. Market volatility. Missing quarterly targets can lead to significant stock price fluctuations. Administrative burden. Preparing quarterly financial statements requires substantial effort and resources. Fiscal quarters provide a standardized framework for tracking financial performance, facilitating budgeting, and meeting regulatory requirements. Whether you're an investor, manager, or stakeholder, understanding fiscal quarters is essential for analyzing financial data, monitoring trends, and making informed decisions. I will entertain questions at the comments. Thanks for watching. Kindly subscribe.